Okay, that's fine, because we can just edit, right?
Yes.
Right. Check. Hello, Anne.
Hello, Dawn. How are you? You just caught me eating a cookie.
No worries. We're just getting all organized and set up here, so.
Lovely.
our
Oh,
mod-
your sound is cutting in and out, though.
What's that?
Your sound is cutting in and out.
Oh, that's weird. We've got everything set up here, so.
Okay,
hopefully
it seems okay now.
Okay,
Yeah, seems all right now.
awesome. Well, we'll just wait now for a bit until Joanna's on, and then we'll just check everything.
Yeah, sounds good.
Thank you again for doing this.
Oh, my pleasure. So do we have a final count of registrants?
I think we have still around 20 now. We got an extra couple in.
Oh, great.
And then I don't know if anybody will fall off, attrition.
Oh, yeah. I'm sure that a few will.
Yeah, and we're just going to we're recording, and then we'll edit and just have it available for folks who may not have been able to attend today.
Oh, that sounds good. Yeah, sounds good. So what do you think of this gloomy day again, hey?
Oh, I know. But all I think is, well, it's not -20.
No, I know. My girlfriend lives in London, Ontario, and she had said they got a little bit of snow when we did a couple of weeks ago. But she had said yesterday she was out with the dog playing in the snow. And I thought, okay, well, that's good that they've got snow and we don't.
Right.
Yeah,
Exactly.
so they can keep it there, right?
Yeah, I agree. For now, anyways.
There's
Hello,
Joanna.
Hello. I didn't forget this time.
Well,
I'm in
that's
Edmonton
good.
again, but I didn't forget.
Oh, were you in Edmonton last week when you did forget? No, you didn't forget. You were double booked.
You reminded me, Anne. Text message and said, "Hey,
you
where are
were
you?"
double booked. It wasn't that you forgot at all.
No.
That's awesome.
Yeah. So,
do you want to test your presentation, Joanna? Just pop it up.
Yeah, let me see if I can share it, and then hopefully that works for me. I've got just one little laptop and one little screen, and I'm like, I don't have anything printed. Present in Teams. Save. Loading the file. And where is it? See, this is why we joined early.
Exactly.
And Armand, if Joanna can't get her presentation up, what would we do?
Hold on.
Oh, there we go.
There we go. It's coming.
Yeah, looking good.
There we go.
Okay, great. And I do have my notes. I can see my notes. What I'll do during the presentation is I will shut off my camera so that I can I can scroll through those notes because I do just have the one screen.
Right.
Okay.
Let's
And
see.
so, and you can
How we
advance
go.
and everything. Beautiful.
Nice.
Joanna,
Yeah.
what I was able to do was view my notes. Like I've got the notes viewer open, and
Yes.
I've just dragged down the teams, right? So I'm not gonna see myself or much of the PowerPoint, but I can see my speaker notes. I don't know if that will help you if you want to try that.
Yeah, I did have it. I usually do a side by side instead of a what you've talked about, Anne. But I
Yeah,
mean,
yeah,
everything
but
works, right? So
yeah,
let's take a
whatever's gonna
peek at that.
work.
Let's do this over here. Okay. This might work side by side.
Participants can turn on the mic.
You turn on their mic?
Yeah.
Yeah, that's fine.
Yeah,
Yeah.
that's what
Okay.
we have it.
Yeah, that's what we want because, yeah, they'll want to be able to ask questions.
Okay.
Yeah,
Makes sense.
yes.
Okay, so I will, like, I'm doing the first few slides, and you know all about
Yeah,
that.
yeah.
And then I'll pass it over to you, and then as you want to go through, just hopefully I can kind of cue in and move on as you need to, but just tell me what to do.
Yep,
and
I'll
do
just
it.
say next slide.
Okay, perfect.
Okay.
Perfect. Right. What's the weather like in Regina? Did we get snow? Is that what's happening?
No snow, but so gloomy.
Oh, is it?
And yeah, like just really overcast and windy and damp. I always say it's an England winter when it's like
Oh,
this.
yeah.
Yeah.
Um,
Which doesn't make me feel good.
No.
but if we can just do it, yeah, I can do it from my
Okay.
thing. I'll join, maybe I'll join for a second and then I'll disconnect, but I'll make sure they are able to admit
Okay.
by themselves.
Okay.
If not, then there will be a list of participants here and we just have to hit admit all.
Okay.
But I'll go, we have 10 minutes, so I'll go
Okay.
make sure that is set.
Perfect. Thank you.
It's sunny today in Edmonton. They got a skiff of snow last night, but
Oh, did
it's
they?
so dry here that in the shower this morning, I had a little bit of a bloody nose. I do get that when it's super dry.
Oh.
So,
And what's the
there-
temperature like up there?
what is it today? I haven't been out of my hotel room this morning. -1 feels like -4.
Oh, it's so about the same as here, temperature-wise.
Yeah.
But yeah, it's super damp here.
Mhm. Yeah, it felt a little Vancouverish to me.
Very much so. Yeah.
That's not my favorite. I don't like that.
No, it's not mine. You know, when we get a rainy day for a day, I'm happy. Like it sort of,
Yeah.
you know,
Right.
takes me back to the home country kind of thing. And
Yeah.
then after a day, it's okay, like I'm done. Give me some sunshine. That was enough.
Yeah. Exactly, right?
Yeah. So 24 hours, I'm good. Yeah, and yeah, I don't like that Vancouver gloomy, damp weather at all.
It was the one thing I missed when I lived in Victoria. And everyone still to this day can't understand why I moved back to Saskatchewan. And I'm like, you don't understand the winters.
No,
It's just
the
dark and
dry
rainy.
and
Yeah.
the sunny skies,
Yeah.
right? I mean, it's just even if as long as that wind's not blowing, our winters are fine, right? We've got nice sunny skies, it's dry, you can dress for it as long as that wind's not cutting through you.
Yes.
I would take the rain.
Oh, you would
You would take, oh, I don't
think
know,
would.
Dawn.
I lived there for about 4 years. The first year was really tough over the winter.
Yeah.
But after that, it got better. So, yeah.
You're a trooper then.
2 winters ago, I had to go back to England. My brother-in-law passed away, and I was there a month, and it was in January, and I was never warm once. Every day I'd get up and I'd go into the kitchen and I'd start moaning and complaining. It's so good. I was sleeping with socks on. I went out and bought thermal tights. Like it was just brutal.
Oh no.
Yeah,
And that's
yeah,
that dampness, right? It just gets in your bones.
have to you have to learn how to dress properly and carry it in.
Well, I don't know how you do dress properly for the damp though. Like it just seems to just seep right through there. Anyways,
Well,
so excuse me for a second. I'm just going to get a drink before we get started.
yeah, for sure. We'll just mute and just keep letting people in as they come and start shortly.
Perfect. All right, we're at the top of the hour. Just wondering, do we have all the people?
Yeah, I think maybe we'll give it, Joanna, maybe just a couple more minutes here. I see
Okay.
folks coming on, and if you don't mind. And I know we've got some internal folks that are coming up as well. And we'll just give it a couple more minutes and then we'll start her up.
You bet. When you see that number looking like a number that you like, Dawn, let me know and I'll get started.
That sounds great. Thank you. Joanna, I think we'll just go ahead and people will come on and in as they can here so that we're not running too late today.
Okay. Okay. Do we want to record the session as well or no?
Yes, it's being recorded right
Being
now.
recorded. Perfect.
It is, you bet. Yeah, and that way people have access to it later.
Great. Great. That
Awesome.
makes sense. Okay.
Yeah.
Well, nice. So we are here to hopefully engage the RCC community members through informed health education. And today's presenters, myself, Joanna Croissant, I have a CPCA and I am a co-op business development manager in the Western region. But really, you're here today to listen to Ann. So Ann Bamford is the CFP, who is a certified financial planner. She is an associate financial advisor and mutual fund investment specialist with Bamford Insurance Group. So let's get started. First and foremost, who is Co-operators? We are a cooperative. We were founded in 1945 by farmers who had lost most of their belongings, savings, during the Great Depression. Our goal of cooperative insurance was to work with policyholders to keep them insured through good times and bad. We became the fastest growing life insurer in Canada, expanding from coast to coast to coast. We have grown to meet the needs of our clients, communities, and our cooperative goals, and we are democratically run. So what does this mean to you? It means that when you purchase insurance through cooperators, you are contributing to a collaboration between us and you. It also means that we are different. We are different than the brokers down the street that you might buy your personal home insurance from today. We are guided by cooperative principles and values, and we seek to improve our communities and the planet. So for a bit of context on how you fit into the cooperators family, you are one of 45 member organizations across 7 regions. And to make this slide a little less messy, these are the icons and logos of the organizations in the 4 Western provinces. So in the West, we have 7 organizations in BC, we have 5 in Alberta, 5 in Saskatchewan, and 4 in Manitoba. They are grouped by sector nationally, and that looks like agriculture 17, services 14, financial 7, retail consumer 4, health 2, and labor 1. There are 22 nominated individuals from our member organizations that are serving on our board. It's a fairly large board. And membership in co-ops represents approximately 10 million Canadians nationwide. And over 180,000 of our clients are members of a member organization like Regina Community Clinic. We have more than 500 independent agents across Canada. To continue down the cooperative path, I'll speak to our purpose, vision, and values as an insurance and financial services cooperative. A few years ago, we adopted a purpose instead of a mission to reflect what drives our social impact. We also refined our purpose to conclude with our communities in place of their communities to convey our inclusivity. We revised our vision to describe the core focus of our ambition in the long term, including sustainability and resiliency. We also revised our values to reflect our cooperative identity and sharpened the focus to 3 core values. 1, responsibility. We balance our care for society and the environment with our business success. 2, integrity. We treat all of our members, clients, employees, advisors, and partners with honesty and respect. 3, inclusion. We achieve success by embracing the diversity of all Canadians. So why am I here, and why do you have to listen to me a little bit before you listen to Ann? My work specifically with our member organizations is centered around our member benefits program. So what is that member benefits program? This gives individual members of cooperators member organizations access to personalized coverage and savings with our auto, home, farm, and commercial. So what's available? From a high level, you have access to all the product lines on the screen in front of you. We have farm insurance, which houses a discount and exclusive coverage built for members like yourself. Home insurance, again, has the discount and the exclusive coverage as well as claims forgiveness. Commercial insurance has a specific endorsement that is free of charge. Auto insurance has a discount, but this is province specific and in the West only applies to the province of Alberta. We do still have an extension auto package here, so reach out to your advisor for more information on that, but it does not include a discount. And last in our product suite, we have travel insurance, which does have preferred rates for members. And what's not here are the extras that Anne will talk to you about today. And in my opinion, my very humble opinion, the most important part of the advice, of the service, of the extras that we can provide to the members of Regina Community Clinic. So from here, I'm going to pass it over to Anne for her portion of the presentation, as this is the reason you're all here today.
Thanks, Joanna. And thanks to John and the team for organizing this event today. Hopefully all of you will find that it's a valuable time out from your busy days. Let's first start talking about financial planning, as it is a critical component of personal and family well-being. It involves setting financial goals, creating strategies to achieve them, and managing their resources effectively. A well-structured financial plan helps individuals prepare for unexpected expenses, save for future needs, and make informed decisions about spending and investments. It provides clarity and direction. It enables individuals to prioritize their financial objectives and to avoid unnecessary debt. Moreover, financial planning fosters peace of mind by ensuring that individuals are on track to meet their long-term aspirations, such as retirement, home ownership, or even funding children's education, or grandchildren's education in some cases. By understanding the importance of financial planning, members of the Regina Community Clinic can take proactive steps to secure their financial future and enhance their overall quality of life. Let's start first with budgeting and cash flow management, as these are really the foundational elements of financial planning. Budgeting involves tracking income and expenses to ensure that spending aligns with financial goals. It helps individuals to identify areas where they can cut costs, allocate funds for savings, and to avoid overspending. Cash flow management focuses on maintaining a healthy balance between income and expenditures, ensuring that there's enough liquidity to cover daily needs and emergencies. Tools such as budgeting apps, spreadsheets, and financial advisors can assist in creating and maintaining a budget. For members of the Regina Community Clinic, mastering these skills can lead to greater financial stability, reduced stress, and the ability to invest in future opportunities. Setting financial goals is essential for creating a roadmap to success. Short-term goals may include saving for a vacation, paying off a credit card, or even building an emergency fund. Long-term goals often involve retirement planning, purchasing a home, funding a child's education. Clearly defined goals help individuals stay motivated and focused, making it easier to track progress and adjust strategies as needed. It's important to make goals SMART. You might have seen this acronym before. Specific, measurable, achievable, relevant, and time-bound. For Regina Community Clinic members, establishing both short and long-term financial goals can lead to more disciplined financial behavior and a greater sense of accomplishment and an overall better, healthier well-being. Our next focus will be on protection strategies. So once we have an understanding of where our cash is going, then we need to look at protection. Life insurance is a vital tool for protecting loved ones in the event of an untimely death. It provides financial support to beneficiaries, helping them cover expenses such as mortgage payments, education costs, and ongoing daily living needs. There are various types of life insurance, including term life, whole life, and universal life policies. Term life insurance offers coverage for a specific period and is generally more affordable, while whole life and universal life policies provide lifelong coverage and may include a savings component. Understanding these options allow Regina Community Clinic members to choose the best plan for their unique circumstances and to ensure their families are financially secure. Moving on to talk about critical illness insurance. This provides a lump sum payment to individuals diagnosed with a serious health condition, such as cancer, heart attack, or stroke. This financial support can be used for medical treatments, travel expenses, or to cover lost income during recovery. It offers peace of mind by reducing the financial burden associated with unexpected health issues. For members of Regina Community Clinic, critical illness coverage is an important consideration, especially given the rise of costs of healthcare and the potential impact of illnesses on earning capacity. By securing this coverage, individuals can focus on the recovery without adding the stress of financial implications. Another key protection strategy is disability insurance. This is designed to replace a portion of income if an individual becomes unable to work due to illness or injury. It ensures that essential expenses such as rent, utilities, and groceries can still be covered during that period of disability. There are short-term and long-term disability policies, each catering to different needs and durations. Income protection is especially important for individuals who are self-employed or don't have an employer-sponsored benefit plan. Having disability insurance can provide financial stability and prevent the depletion of savings during challenging times. Don't underestimate what a good financial plan will do for you. Even if you do have an employer-sponsored benefit plan, you might be available for a top-up or able to discuss how you can get through a disability when most plans only cover 66 to 75% of your monthly income. Next in that pillar of financial security is savings and growing wealth. Tax-free savings accounts and registered retirement savings plans are two popular savings vehicles in Canada. A tax-free savings account allows individuals to contribute up to a certain annual limit, with earnings and withdrawals being tax-free. It's ideal for short-term and medium-term savings goals, or can also be an additional buffer in retirement. An RSP, on the other hand, is designed specifically for retirement savings, offering tax-deferred growth and tax deductions on contributions. Withdrawals are taxed as income, and oftentimes that's taxed at a lower tax rate during retirement. Understanding the difference and benefits of each can help Regina community members make informed decisions about where to allocate their savings for the maximum benefit. Registered Education Savings Plans, or RESPs, are a specialized account that help families save for their children's post-secondary education. Contributions to an RESP can earn government grants such as the Canada Education Savings Grant, which matches a portion of annual contributions. Funds in an RESP grow tax-free, and withdrawals used for education are taxed in the hand of students who typically has a lower income. This makes RESPs a highly effective tool for education planning. So remember, utilizing RESP accounts can ease the financial burden of tuition and related expenses, ensuring children have access to quality education. A fairly new investment vehicle, about 2 years old, was launched by the government, which is the First Home Savings Account. This has been designed or introduced to help Canadians saving for their first home. Eligible individuals can contribute up to $8,000 per year with a lifetime limit of $40,000. Contributions are tax deductible, similar to an RRSP, and withdrawals for qualifying home purchases are tax-free, which is where they differ from an RRSP. The First Home Savings Account combines the benefits of both RSP and TFSA, making it an attractive option for first-time home buyers. Understanding and utilizing the First Home Savings Account can significantly enhance your ability to achieve home ownership goals while maximizing tax advantages. The final segment for today is estate planning and charitable giving. Estate planning involves preparing for the management and distribution of assets in the event of death or incapacitation. Key legal documents include a last will and testament, and a power of attorney for financial matters, and a healthcare directive. These documents ensure that an individual's wishes are respected and that trusted individuals are appointed to make decisions on their behalf. For Regina Community Clinic members, having a comprehensive estate plan provides peace of mind and protects one's loved ones from legal complications and financial uncertainty. Charitable giving can be an integral part of estate planning, allowing individuals to support causes they care about while potentially receiving tax benefit. Strategies include donating assets, setting up charitable trusts, or naming charities as beneficiaries in wills or through insurance policies. Plan giving can also enhance legacy and community impact. Incorporating charitable giving into your estate plans can align financial decisions with personal values and contribute to meaningful social change. Understanding the tax implications of estate planning is crucial for preserving wealth and ensuring that ensuring that assets are distributed according to one's wishes. Strategies such as gifting, trusts, and insurance can help minimize tax liabilities and maximize the value passed on to beneficiaries. Legacy planning also involves considering how one's values and contributions will be remembered. For RCC members, thoughtful tax and legacy planning can ensure that their financial legacy supports both family and community goals. So let's talk about building financial strength, security, and confidence. At Co-operators and at Bamford Insurance Group, we provide advice and solutions to help you protect what matters most and to plan for the future. The first step is to take stock of where you are today and make sure the basics are covered. This includes an emergency fund for unexpected expenses, a debt reduction plan to manage liabilities, essential legal documents like a will and a power of attorney, and these foundational elements ensure you're prepared for life's uncertainties. Next, we focus on protecting what you already have. This means securing your assets and your ability to earn an income. Key solutions include life, disability, and critical illness insurance, coverage for your home, auto, and business. Protection is about peace of mind, knowing that if something happens, your financial plan stays intact. Once you're protected, it's time to think about the future, saving for retirement or non-retirement goals, and education ensures long-term security. We explore options like RSPs, TFSAs, and RESPs to help you reach those milestones in life. Then beyond savings, we want your money to work for you. Growth strategies include temporary and permanent life insurance, segregated funds, and mutual funds. And these tools help you build wealth and achieve financial independence. Finally, we look at creating your legacy. Estate planning, Finally, we look at achieving your legacy. Estate planning and charitable giving ensure your values live on and your loved ones are cared for. This is about making a meaningful impact beyond your lifetime. At Co-operators, we're here to guide you through every step, starting, protecting, saving, growing, and transferring to that next generation. Together, we can build a personalized plan that fits your goals. Another important slide I want to share is this one. We've just talked about your personal goals, things like debt reduction, early retirement, or saving for education. These goals are the foundation of your financial plan. Now let's take a look at how we turn those goals into action. This next framework shows the steps to build a strong financial future. Start by covering the basics like an emergency fund. Protect what you already have with insurance solutions. Save and grow to achieve those goals we just discussed, whether it's retirement or a sabbatical from work, And finally, transfer your legacy through estate planning and charitable giving. Every goal you have fits into one of these steps. So as you can see, building your financial future is a process, and we're here to guide you through every stage. Before we wrap up, let's open this up to any questions or thoughts that you may have. What stands out to you? What one step would you like to take first? Thank you for your time today, and together we can make these goals a reality. Next steps are just quite simple. Gather your documents and make an appointment. We're here to guide you and your family towards financial resiliency.
And I think that's it.
So let's open this up for questions.
Yeah. Thanks, Anne.
I'll do one question if that's okay, just to maybe get us
Absolutely.
started.
Yeah.
So there's been lots and lots and lots of talk about the value and benefit of tax-free savings accounts. And I'm still trying to figure out whether that's a short-term benefit where you're saving for something or a long-term.
It can be either or both. So I'll give you an example.
Let's say we have an individual who is not out in the workforce and is not creating our RRSP contribution room, but still wants to save towards retirement. They could use that tax-free savings vehicle as part of their retirement plan. I have a real scenario of an individual who is saving for retirement, has fairly low income, and is also saving for some other short-term goals, family vacations, those types of things. So within her tax-free savings account, we have two goals there. So the investment decisions that we make are separated to achieve those two goals.
Goals, basically, that you know that you would use that for?
Yep. So the in this particular scenario, the shorter-term goal is achieved by more conservative investments within the tax-free savings account, and the long-term goal of retirement, she is a little more aggressively invested. And when you receive your statements from the cooperators, those two investments are very clearly defined. And part of that review process is to make sure that she continues to understand and continues to have two different investments working towards two different goals, but using that same vehicle of a tax-free savings.
Sorry, that helps, and because it never seemed to make sense to me on a short-term basis, because you wouldn't be making a lot of investment wins there,
Well, it depends on the definition of short term. So typically we would call short term anywhere from 2 to 5 years for a time horizon. If we're looking at an emergency fund or saving for the furnace that's going to be replaced next year, then the tax-free savings account's not going to provide a lot of value. An individual may just be as well served by having growing money in a savings account or short-term term deposit or a money market fund. But if that goal is 2 to 5 years out, I'm saving for a new vehicle in 5 years, then that tax-free savings will still provide benefit. Every dollar that we don't have to pay in income taxes is a dollar that we're keeping in our own investment portfolio. So, even if an individual only earns $50 a year in investment income, that's reported. And if a person is in a 15% tax bracket, I'm not sure why I picked a number that I have to do calculations on, but let's say a person's in a 10% tax bracket, because I can do that in my head. $5 of that $50 that's been earned has to go to the government. It has to be declared and has to go to the government. So if you can keep $50 and reinvest and get the compounding of $50, it's better than keeping $45 and get the compounding effect of $45. So while you may not see significant value on in a tax-free savings for a short-term goal, as you said, Dawn, because you may not be getting that growth, you're still going to see the value.
Thank you.
I have 2 questions.
Okay, Suzanne.
I don't know if they can hear me. Thank you for your presentation.
You're welcome.
Good, you can hear me. Okay, awesome.
I can.
Thank you. I had 2 questions. One is regarding pension, and so I know we pay into the pension here, but is there any kind of financial advisor that we would have access to who could help us kind of navigate if we have pensions with other previous employers and kind of conglomerating those?
Yes, I can help you with that. Thank you for that question. Yes, while I don't have access to any of your pension information through Regina Community Clinic, any statements that you have from past employers, I can provide advice. Sometimes they can all be combined into one investment account, depending on the pension legislation. So certain industries are federally regulated, most industries are provincially regulated. So if you have two past pension plans that are provincially regulated, you can bring those 2 together and get ongoing advice and management going forward.
Fantastic. Thank you. My second question had to do with benefits. So say in our benefits plan, it's kind of a fixed benefits plan from what I understand. If we wanted to say, is there any way to have some flexibility within the benefits in terms of, like, say you're not using, getting your eyes checked, but you are wanting braces? Is there any way to have fluidity within the benefits that we have, or to create a separate fund to go towards that?
I'm not sure if Joanna might.
Ann.
Joanna, you might be
Yeah.
better to answer that.
Dawn would have access to our group benefits people directly, but from what I understand with your plan specifically, there is no fluidity in it yet. Is that an option that can come down the road? Possibly, and maybe something that can be discussed with our group benefits people going down the road. Otherwise, if you're looking for small savings type things for braces, which are super expensive, I put my kids, all 3 of them, in braces, I get it, then I don't know, Anne would be best to tell you if that's just a regular savings account or TFSA or however that looks. But
yeah, we could certainly explore some options for those types of things.
That's a good question. Thank you. Thank you both.
You're welcome.
I don't see any other questions online, and if you do have a question, just unmute and ask. And here, I think we have a question.
Yeah, I'll do one regarding the first homeowner savings account.
Yes.
As far as that being long-term, short-term, with young folks just starting into their adult jobs and soon planning on purchasing homes, the window is a bit of a short time for that age group. I understand now with the new thing, it maybe will be better for people as they go ahead and have more time. But is there benefits with doing that if it's under 5 years, or would it be better served elsewhere?
Oh, certainly there's benefit to doing that. And as I mentioned earlier, the maximum annual contribution is $8,000. That doesn't mean that is the required contribution. It could be a contribution of $100 a month. Somebody may still be in university or just starting out in the workforce, and there's not a lot of cash when we're first starting out. So the maximum is 8, but the minimum can be whatever is affordable. There is no time limit on those contributions. Just they cannot exceed that maximum of $40,000. So it's definitely worth it. Again, what we're always trying to do is maximize our after-tax flow, our after-tax cash flow. So any tax savings we can take advantage of. For most of us as T4 employees, we don't have a lot of opportunities to reduce our taxable income. But the first home savings account is one of those opportunities, right? And so as I talked about earlier with savings, if you don't need to pay interest income to the government in taxes, why would you? The same goes for the first home savings account. If the goal is to have a home, whether that home is 5 years, 10 years, 15 years down the road, take advantage of contributions to it, save some income taxes on a yearly basis as you're making those contributions, and then pull that money out whenever you need to for that home purchase.
Great, thanks, Anne.
You're welcome.
And I don't know if you can speak to this, but in terms of if you're an executor and you're trying to figure out how best to avoid probate and any associated fees, can you speak just generally to that process and how best to
Sure.
avoid?
Yeah, sure. You have to be careful when putting plans in place to avoid probate. I mean, it is a tax, and there are certain things and certain vehicles we can use to avoid probate. If I take us just a step back a little bit, I want you to all imagine a pot and think of that pot as being your estate plan. Some things have to go into that pot. Some things can bypass that pot and go directly to a beneficiary. So if you can name a beneficiary directly, that saves on probate. Whatever goes into the pot is what probate fees are attached to and what legal fees are attached to. So if I use an example of a couple who have RRSPs, they can name and should probably name each other as beneficiaries of their RRSPs. First spouse passes away, those RRSPs will pass to the surviving spouse outside of the estate, no probate, no income taxes. Now, when the second spouse passes away, those assets will become taxable. So this is sort of a trap. If a person names their kids as beneficiaries, so we now have one spouse, they choose to name their kids as beneficiaries, the RRSP funds would go directly to those named beneficiaries, but the estate is still responsible for income taxes. Now, this is not really addressing what you're talking about, Don, but I'll get to that. So the estate still has to pay those income taxes. So that's a challenge, right? So the executor is not even involved in distribution of those assets. Whoever is holding the investments makes payment directly to those named kids, but now the executor has to try and get that money back from the kids, if that's the only asset, to pay income taxes. So they avoided income taxes, avoided probate, but potentially created a problem. Whereas in most cases, the advice I give to clients is that when it's one spouse, name the estate as the beneficiary. Yes, there are probate fees to be paid, but then there's money in that estate to pay income taxes and debts before money goes on to the kids. Life insurance, though, is a completely different scenario where we would always recommend that we name a beneficiary to get that money into the hands of beneficiaries as quickly as possible, not have it tied up in the estate, so that then those individuals can take care of some of those final expenses that might be there, continue on with living expenses, whatever the intent of that insurance is. So one has to be careful when avoiding probate. Everybody's circumstances are different. I'll give you a bad example of avoiding probate. I've seen this too many times. So mama is left behind and decides that instead of having the bank account go into the estate and be subject to probate, that she will make the account joint with one of her children. So they go ahead, they go to the bank, they make the bank account joint, then, and it's a sizable bank account, then there's a marital problem for the child and his or her spouse, and a divorce ensues, and that divorced spouse then claims that there's an interest in that bank account because their ex-spouse is named as a joint account holder. So that's a nasty situation that can be avoided and should be avoided. I don't think we have to be afraid of probate. It's 0.7% of assets. So I don't think we need to do crazy things to avoid probate. We can do sensible things to avoid probate where it makes sense. That's a kind of a long-winded answer.
No, that's really great. I appreciate that because I just don't understand how probate is meant to work. Is it a process by which to make sure that the wills and that particular estate are distributed as per laid out things, or
it's not a simple process, but it's the purpose is for the probate court to give the seal of approval and say, yes, we accept this as the last will and testament. And so there are supporting documents that have to be completed to go with the will. A very detailed listing of assets that go into the estate, and no rounding up or approximations. I went through this a couple of years ago when my second parent passed away, and my first round at it got rejected because I had put, approximately $5,000 in the bank account or whatever it might have been, and it needed to be an exact number. So it's a bit of a painstaking process, but really the only point of it is to validate that this is the last will and testament, and now the executor can go on with their duties. There's no policing takes place beyond that to make sure that the executor has complied with the instructions in the will. It's just a legal process to say, yes, we accept that there's no other will out there that postdates this particular will.
Thank you. That's really helpful. Are there any other questions that folks would like to ask? All right, I think we're good then. And thank you, Ann and Joanna. I don't know if you have any final commentary based on the presentation.
No, I think, every presentation that we do, we want to make sure that the audience understands that Cooperators is a cooperative, that our intent and our purpose and the values, the principles that guide us, really, we're just here to help people have that foundation so that you can live your lives with peace of mind, right? So the financial advice that our advisors provide is incredibly valuable. And I do know that, it's everyone's welcome. It's not a big bank. You have to have so many assets in order for us to deal with you or work with you. We're a cooperative and everybody matters. So that's, I think from my perspective, that's what I always want people to leave with is that the door is open. Ann's information is on the screen. If you have questions, absolutely reach out. And I've known Ann a lot years. I should have actually spoken about her bio, but it was included in the invitation. A wealth of knowledge. Super excited to have that expertise with us today. And I hope everyone on the call will be able to reach out if they have questions. That's it.
Awesome. Thank you very much. All right. Well, then we'll close her up. And And please feel free to reach out to Ann if you have any residual questions or work with if that helps you in your financial journey. Thank you
Perfect.
both. Yeah.
Thank
Thank you
you.
everyone for your
Great day,
everyone.
participation.
Bye, everybody.
Bye.
Bye.